to stoop.
Completely. I think that with the advent of computerized trading, which has such a big part of the market now, combined with the Volcker rule, where you can't have market makers commit capital, you just have much bigger moves in both directions. And I think clearly you have a situation here where the market has overreacted to the Fed's comments, and you see program trading taking over.
All right, that made little sense to me if you think about it, because the same factors were in play when we were running up, right? So you didn't mind them when we were running up, but now you have a big problem when the things are going down. God forbid anyone anywhere should take responsibility for anything. It just doesn't happen. All right, Charlie Gasparino, what do you make of that? I thought it was a kind of an interesting excuse, but I mean, blame it on volatile, fast, rapid trading and all of that. But
he's not totally wrong. Obviously, right. Swings because of algorithms, they kick in. By the way, that price discovery right now is so fast because,
right.
You know, a moment something happens.
Up when we were running up,
right.
though.
In the old days, when everybody used to call each other and you know go to the New York Stock Exchange and get a market maker to buy your stock. You know, things happen slower. This is instantaneous. You have instantaneous price discovery. That's not always
instantaneous going up, is what I'm saying.
You know? Great point. Yeah. And what your first guess was really good. The guy from the oil report, he made a great point that I want to hit on a little bit. He talked about how, you know, oil prices coming down, generally that's an indicator rather than a stimulus for the economy. It's an indicator the economy is falling. The other thing he said is that commodity prices like aluminum and all these other metals that are coming down, so that means people are not buying that commodity amid tariffs. Think about this. Those were the metals that the Trump administration imposed tariffs on. Those prices are coming down. So instead of having the desired effect that you buy more, particularly more domestic, businesses are cutting back, and that's what tariffs do. It's a disincentive to basically invest and produce because your costs go up.
Or the markets are just feeding that.
Or the costs are going up. And by the way, one of the things, I think the biggest problem with Mr. Mnuchin's comments is that he doesn't take responsibility for the fiscal policy errors that's leading to the market volatility. And those fiscal policy errors is not the tax cut, because we think it's net better, but not great. It's not deregulation, because that's been great. It's tariffs and trade war, which is freaking out this market. And on top of that,
enough though, the president hasn't commented on the Federal Reserve move yesterday.
Right.
Now we might get something today, and we certainly heard from Mnuchin today that it's an overreaction on the part of the markets. But what do you expect the president will say?
Well, you know, I don't know. He's probably going to say something today. But you know, it's interesting. You have. Listen, markets and economies don't blow up or trade down because of one reason, always several reasons. One reason, obviously, I think, is the fear of a trade war. Another reason is, on top of that, when you combine it, a noxious mix, is that the Fed feels it has to tighten. It feels it has to tighten both on the short end and the long end. The short end, because guess what? We need room. You know, the economy is strong, and we need room to lower rates if we have a recession.
But when you talk to your buddies about this, and what is their reaction to the market's reaction?
Just what I'm telling you right now. In addition to a worry about a trade war, you have the Fed feeling it has to tighten, both on the short end, raising Fed funds rate because the economy's strong and we need room for a recession to lower them. And on the other side, on the balance sheet side, which controls the 10 and the 30, it has to unwind that, okay, to a certain extent. It has to basically sell that because the U.S. can't hold that big.
Well, you see what you're saying there, and I agree with you, that the Federal Reserve's actions post the meltdown to bring us down to 0%, they need more arrows in the quiver. And even if it's not justified, how many they can squeeze in and add on is going to come in handy for that slowdown to come. And
it's going to hurt.
They're in a box.
And they're in a box. Now, really what should have happened is that Yellen should have, Janet Yellen, the predecessor for Powell, should have been raising rates faster and unwinding the balance sheet.
She started in, what, 2015, right?
Something like that.
Right.
Yeah, but she should have, that's when the economy was starting to reach a certain level where you can raise rates and it wouldn't have impacted that much.
Did they tell you we're back to what would be a normal range? Because the normal range would have Fed funds at around 5%.
5%. Listen, we're obviously not going there. I mean, I just think the Fed's in a... Listen, on top of that, you know, this sounds esoteric, but the dollar has to be worth something. We're not on the gold standard anymore. If the Fed can literally come in and create dollars and there's no consequence, that means the dollar's not worth anything but the whim of a Fed. Okay,
so this is the Fed's fault.
Some of it is.
All right.
Some of it is policy.
Not anyone in the White House's fault.
Well, it was Obama's fault to begin with because he, instead of stimulating
all I'm saying is when I hear everyone in this administration point fingers at anyone but themselves.
Right now, no, it's ridiculous because their biggest fiscal policy mistake is the fact that they're threatening the world with a trade war. The impact is already being felt because you saw higher aluminum prices. He just said it. Right. And on top of that, markets are scared. The second biggest policy problem, I think, is the way the tax cut was skewed. Way too much to corporations. And corporations are the least efficient at creating productivity and jobs because what they do when they get a tax cut, their fiscal responsibility or fiduciary responsibility is not to the taxpayer and to the employee, it's to the shareholder.
Don't you think, though, not just forcing an opinion here, but I think I'm fairly good ground here, that we don't get anything remotely like consistency from the White House on what's acceptable policy regarding avoiding a government shutdown, on trade. It was going to be about intellectual theft and all that, and it veered into other wacky areas.
Weird stuff. Right?
On even the behavior and the response to the Federal Reserve, even on the wall or the fence or whatever. It's all over the map. Listen, and it's coming back to bite their hiney.
Yeah, I think the sort of volatility of President Trump is now in play in the markets in a major way. That when you talk to sophisticated investors, brokers who deal with major clients, their clients are scared what he might do next. Okay. He really is adding an element of fear. Now, you know, I'm going to get a lot of emails from people, oh, you're just a never Trumper. These are from people that don't have skin in the game.
Right.
I'm telling you about people with skin in the game.
Absolutely. If you're going to own them on the way up, right? You got to own them on the way down. Thank you, Charlie, very, very much. Again, this is not a political thing to me. I mean, I just read the numbers. It's not red or blue. As Charlie and I like to say, we just follow the green. And the green is confused. The guys who hold that money, who are much more interested in making money than ever making friends with anyone in the White House or anyone in Congress or anyone in the House. And right now, they're confused. They don't know which end is up and which way the administration will go. So if you are going to marry yourself to the markets when they go up, you've got to take some responsibility when they start going down. And they are going down big time. The NASDAQ is in bear market territory. The Russell 2000 is in bear market territory.